ladies and gentlemen, it's Eric Coffin. I'm here at the November 2017 Metal Investors Forum. I'm here right now with Brandon Macdonald, the young CEO of a young company. I think Fireweed listed, what, 4 or 5 months ago, I guess?
June 1st we started trading.
Okay. And Fireweed has a very interesting and already pretty impressive looking lead zinc project up in the Yukon. I don't think most people, they probably don't recognize maybe yet what you have, and maybe they need a sense of scale of what Tom Jason looks like compared to what's out there at a more general level, what's out there in the sector.
Yeah, I think that there is perhaps an underappreciation of how rare assets this size and grade are. If you look at the discovery rates for assets like this, it's very low. There has been an inventory because of the historical lull in zinc that we're now coming out of into this hot market. There was this inventory of older assets like the one we bought that are rapidly depleting. These assets are going to disappear, and without a discovery rate to replace them, something like this becomes extremely valuable. The benchmark historically, the rule of thumb was that for an asset to be interesting in zinc, you wanted 10 million tons at 10% equivalent. So we have about, in our historical resource from 2007, which we're updating this year, there's 24.5 million tons in the inferred alone at more than 10% equivalent. And plus another 6.5 in indicated at a slightly higher grade. So it's an unusually large asset, and sort of is up there with the big boys.
So now you just were in there. You did some drilling. You're still reporting drill holes, and that drill program is essentially going to allow you to update and bring the resource into 43-101 compliance, right?
So the resource from 2007 was a pretty good resource, but it is 10 years old and it's not ours. So right. It's a historical resource, and we'll bring it up to current standards. So for people following the stock, I think the things to consider are that 2007 resource was reasonably rigorous. It was done by Roscoe Postel. Yeah. But then since then, you've had 11 holes put in 2011 and 14 this year. So we're anticipating some change in the resource, and we think it's going to look very good. I think that in contrast to perhaps historical resources that are 20, 30, 40 years old that are very different methodology, this one, I think maybe the market will be a bit surprised that we hold that tonnage, if not grow it.
Okay. Now, I know part of the plan, once you've got that done, you'd like to demonstrate, some sense of what the economics are with a PEA, just to get people comfortable with the potential economics of something that's that is up in the Yukon after all.
Yeah, I think that I have a huge belief, and I'm very excited about the exploration potential on our property, the capacity to grow the existing zones and find new ones. But all of that is kind of irrelevant if you don't have margin on the tons that's there. Right. And we knew that from the get-go, and we knew there would be skeptics. So I'm pretty keen to see what our PEA results are and really show the market that when you have that size and you can build to scale and you have that grade, you can have margin even in Yukon.
Well, and I think, if I recall correctly, the way the deposit's formed, I think the stuff closer to surface, you get some really nice high-grade stuff, so in theory, you should be able to start this thing out with a nice high-grade mining for it's not a starter pit, it's an underground. It will probably be underground, but the
starter
the underground equivalent of a starter pit.
Yeah, and I think that's perhaps the untold story when you look at a resource and you see an average grade, that is not the normal grade, that just happens to be where the average is. So with ours, you do have areas like the Tom East zone, the Jason South zone, that have incredible grade potential and average very high grades. The historical resource from the Tom East was about 900,000 tons indicated and another 900,000 inferred, over 20% zinc equivalent. Right. So when you could front load your economics with something like that, it makes a huge difference.
Now, in addition to obviously the resource, which is fairly large in and of itself, you really expanded the project size this year. I know you haven't had, you didn't have a lot of time to really deal with all that new ground, but I think that's part of the near-term game plan too, right?
Yeah, and I think that when you're out looking, when we look at these style deposits, they're in clusters. You have this productive basin system that creates these SEDEX deposits. Whether it's a Red Dog or whatever, that they're going to be more than just one. So we picked up the neighboring property and quadrupled our property size, and it allows us to be the first person ever to own both sides of the so-called end zone, which is highly prospective and underexplored. And it was underexplored because it spanned a property boundary.
Right. So what can we look forward to over, say, the next, well, let's say 3 to 9 months? I mean, what's sort of your game plan?
So the shortest term would be December. I would anticipate a resource update. March-ish next year would be the PEA.
Okay.
And then I think what you'll start seeing next summer is some real focus on exploration to show, now that we know we have margin, just to show how big this thing can get.
Right. Just basically get really aggressive on the exploration side.
Yeah.
Okay. I mean, it's a great story. It's, like I said, it's a very new company, extremely tight share structure, very well structured deal. It's quite cheap in relation to its peers. I mean, I think Fireweed's got a great future.
Yeah, I think so too.
Thanks for introducing it to our viewers.
Thank you.
Thanks, Brandon.